So Alibaba has a big problem, and it's not going to be pretty. So I think throughout the entire course of trying to build out this entire YouTube channel, I've been branded as that hopeless Alibaba bull. So I can't seem to have enough about the company, and more specifically about the stock. So we talked about a broad range of topics, including its e-commerce competition, its cloud computing arm, its investments, its valuation, and essentially painted gold on this investment opportunity. Of course, voices on both sides of the aisle are equally loud. Some even ridicule me of even trusting numbers coming out from a country like China, or Chinese companies by and large. Ultimately, we vote with our dollar bills and capital, and not with the volume of our assertions and arguments. So it's quite funny how we can have cults surrounding companies like Tesla and Palantir, but we can't have it around a Chinese company because it's China, or we don't support the communist regime. Don't you worry, our contributions are minuscule. They need trillions and trillions of dollars, and our investment can't even move a needle. So I think for most investors, we are generally apolitical, and we would just like to deploy our capital in the most effective and efficient manner. However, we can't deny that the political environment and landscape is going to shape our entire investment atmosphere. So as far as we are concerned, we try to not talk about politics, but it's always at the back of our head. The Russian-Ukraine conflict is one example, and the Chinese government is another. So just a speech from the senior officials, and it can drive the entire basket of stocks up by 20 to 30% in a day. I'm not saying that this is supposedly the norm, but that's how the market reacted, and we are where we are today. You know what's the norm? Smashing the like button, of course. Now, since we have set the backdrop of the entire bear thesis for this investment, let's get right into the crux of this issue. So to borrow an argument from Rowan Street, where they succinctly put it, recent Chinese government crackdowns and CCP's Common Prosperity Policy, which most of us are well aware of as they have been widely covered the previous year, have a direct impact on the future capital allocation policies of both Alibaba and Tencent. So they go on further to assert that when management of the companies that we are owners of do not have full control of the capital allocation, that goes against all their foundational principles as investors and stewards of your capital. So I think the argument here is rather simple. They are just expressing the view that the common majority has, which is the sheer lack in trust of the government, allowing companies to manage their own capital with zero interference. I'm not here to argue against whatever they have put forth, by the way. I completely agree with their assessment, and it's definitely one of the most prominent risks that all Chinese equities are exposed to today. I don't have a godsend revelation or better insights into how China is trying to govern otherwise. However, I think the bigger difference between investors and non-investors of such instruments and Chinese equities by and large varies in the spectrum and ideological goals of these companies. So to quote a very short paragraph from Fred Liu, who is also a fund manager, his assessment of China is that capital is meant as a tool to enhance and to accelerate society's goal, not as an end goal itself, versus many Western markets, where it seems that the betterment of shareholders is often the end goal itself. So if the well-being of the capital must be sacrificed to ensure a better long-term direction of society, then in the Chinese government's eyes, it's a worthy trade-off. Full stop. If you have missed a single word in the last 3 sentences, go back and replay this video. Get comfortable with this fact. I think especially for people that studied finance, particularly Corporate Finance 101, if grounded in Western finance literature, the only goal of listed companies is to maximize shareholders' wealth. Nothing else. They presume that with this end goal in mind, the rest of the other stakeholders in the entire equation will be taken care of. Likewise, like every other theory out there, there is a certain degree of truths and a certain degree of deviation in the real world. Clearly, the Chinese way of governance fundamentally don't believe in this methodology and this ideology. So let's not kid ourselves and box ourselves into the presumption that, hey, maximizing shareholders' wealth is the best and the only way forward. Sometimes, societal well-being and shareholders' wealth are fundamentally at odds. Gambling companies are an example. Gaming companies are another. You add in social media companies, tobacco companies, your big pharmaceuticals, Wall Street. Think about the number of scandals these top names are embroiled in over the last 3 decades. I don't really like to explore many of such conspiracy theories, but it's definitely good to think about the different relationships across these different functions and why this world is so complex with no easy solutions and no easy answers. So how do you think the terms like industrial military complex and Wall Street treasury complex come about? Please don't be mistaken. I'm not saying that the Chinese system is more superior or the Western system is more superior. I just think we should get the full deal and not just see it from one perspective. So I respect that Rowan Street has made their thought process so transparent on the internet, and I will leave their shareholder letter in the description box down below to allow you to have a look at it. So I think my only issue with their position was that they were initially investors of both Alibaba and Tencent since 2018, but exited them in Q2 of 2021. I'm quite sure as responsible capital allocators, they did the whole suite of due diligence before deploying the capital. Was there really anything that fundamentally changed from then till now? Yes, I know people are going to comment, why do you still not understand? Look at 2020, throughout 2021, they had the crackdown, stopping of IPO, fines, common prosperity, data regulations, and the list goes on. No, listen. What I'm implying is that based on the narrative put forth by Rowan Street, when they bought into their Alibaba and Tencent position back in 2018, they are implying that Alibaba and Tencent had control over their capital, and only until recently, they suddenly don't have control after the crackdown. I think that's plainly disingenuous. From the start, when you're putting money into these Chinese equities, you must be comfortable with this difference in governance framework and governance culture. China has always positioned itself towards the more socialistic, idealistic end of the scale, and they are not afraid to tell the world about it. So the 2 paragraphs that I quoted from Rowan Street and Fred Liu, remember to write it down on a piece of paper, burn it, and put it in water and drink it. Let whatever that was said be engraved at the back of your mind whenever you are putting or deploying capital in Chinese equities. Now, enough with all the scary and uncomfortable discussions thus far. Let me provide some alternative framework on how to view this painful scenario. 1. On the topic of maximizing shareholders' wealth. Like Jack Ma put it in 2015 during the World Economic Forum, when you have $1 billion, that's not your money. That's the trust society gives to you. What trust are we talking about? The trust for you to have the discipline and the wisdom to allocate it effectively for the greater good of society or humanity. This is just a fundamental ideological difference between the East and the West, where one focuses more on individualism while the other places priority on the collective. To me, at the end of the day, when there is real value creation at scale, everyone stands to benefit. We always like to presume that it's a zero-sum game. When shareholders win, there must be someone losing. Theoretically speaking, it might be true to a certain extent, but the argument for that has to be more nuanced than this. Number 2, on the finance literature, we also know that capital markets are not free from error. If it really is, there really isn't a need for regulations and government intervention. So the key here is, what is the level and extent of the interference? And the US and China seems to be on the opposite side of the spectrum. A command economy, despite enjoying several upsides, such as the economic miracle that we have seen in the last 30 years, comes with the tail-end risk of tyrannical and absolute disastrous leadership from the top, which would essentially extinguish the progress and prosperity due to the nature of its power structure and its hierarchy. Just an ending note, I don't think the Chinese government is so ignorant to not understand the role of capital in their system. Sure, they are definitely not going to model after the US's system and allow for companies and private capital to expand barbarously, but just keep China's end goal in mind and size your positions accordingly. So with that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!